Did investors and traders like you and I just get trapped by Wall Street in Nvidia's earnings release? Well, one thing's for sure, everything's falling across the board, with gold, silver, and of course copper suffering their worst two-day stretch since 2021. In recent videos, we've been talking about how markets are a little bit extended and how underneath the hood, small caps were starting to weaken into what just happened. But is it about to get a lot worse? In today's video, we talk about the opportunities and of course what the bonds market thinks might happen next. This will be a good one. Join us as we cover stocks, commodities, and cryptos together. Well, welcome back everyone to The Daily Show. My name's Tom, and as always, we're going through the macro, the data, the lead indicators, and everything you need to know about markets right now. If you've ever been asking yourself the question, why are markets doing these things and where the flow's going, then remember to subscribe and smash that bell icon as we do cover it every single day, bringing simplicity, hopefully, to the overly complicated when it comes to flows. So today was an 87% downside day, but you wouldn't know it when you took a look at the heat map this morning because, of course, it was red across the board. And Nvidia was the only real shining star, with a 10-to-1 stock split being announced, which brings in some very interesting stats moving forward because, of course, a stock split announcement generally brings some big bulls to the crowd. Are there some other candidates on the future as well? Horizon? Well, yes, there are, and we'll go through those very, very soon. So let's take a look at some other things that we've been seeing. In particular, something that we brought up in our last video was the unusual overall delta flow of markets, suggesting that Wall Street was kind of selling into us, the retail trader. And of course, they popped the market and then sold it for another seventh day overall sell. So is this part of a bigger storyline? Well, maybe. And that's because there's a lot of crowded trades right now in markets. In particular, we mentioned gold and copper were pretty heavily crowded. We saw it in the stats, and we also saw it in some of our exhaustion indicators we share here on the channel. Now, one of the things about that is, of course, when you see these big fall-offs, you have to ask yourself the question, is this the end of the trend? Well, I don't think it is in terms of copper and gold, and that's because, remember, gold is being run by central banks at the moment, and we're in effectively a currency war. So they're buying big amounts of bullion, and I don't think they're going to stop buying anytime soon. The other thing about it is that because it has an epic run on it, when it becomes overly crowded, it needs to do a pullback and shake people out. So we'll look at some of the key levels a little bit later on today's video of where you might be wanting to check out gold on the future horizon. Now, did we expect a possibility of this volatility to come in? Well, according to Goldman Sachs indicator, which is here the sentiment indicator, we were getting a 1.5 read. Now, we got that earlier back in March that led into, of course, the April sell-off. And we get it again here at all-time highs in markets. And I think it's, a very important stat to be looking at along with our overall cycle analysis, which we'll discuss very, very soon. We've got some great charts here from Mike Zaccardi, also over on X, if you wish to follow him. And you can see here he's got some stuff from Bank of America where it shows you that stock splits from 2010 to today, or even all time, are very bullish for the markets. Now, generally speaking, there's no real reason it should happen. You could argue, of course, options become cheaper, allowing more people to kind of, let's say speculate on the markets. And of course, for Nvidia, I think that is an attachment or advantage, but the results don't lie. Here you can see here stock splits returns have a positive skew, and 12-month stock performance distribution tends to be very, very high. You'll also see that there are a lot of other stocks that could be stock split candidates. Of course, the notable ones, things like Costco, Chipotle, these are some of the ones that maybe some traders are going to be moving into, not just because they like the trend, but because they like the announcements on the horizon. So certainly some interesting stuff there. So whenever you're talking about markets and you want to know whether they are going to sell off heavier, there are a few indicators that you should always look at. One of those, of course, bonds. And you can see here the difference between yield premium of junk bonds and treasuries is showing that the market is not freaking out right now. We also have global upgrades going on across the world. So you can see here, Bank of America's overall earnings revision ratio actually ticked up a little bit, showing that they believe earnings are improving. And as we've seen recently on the show, GDP is also supposedly improving according to Goldman Sachs, etc. Now, we might not need to believe all of that, but what we can see is that there are some opportunities in markets, especially if we see things like the equal weighted market make all-time highs, which we'll look at later because that is one of the weaker markets at this stage. Look at these forward PEs, 14.7 for small caps and mid caps 15.7, with a lot of the time, especially late cycle investing, us tending to see these possibly even lead into 18. Now, it'll be a very interesting point here to see whether we actually do see this expansion. But in general, people like Stanley Druckenmiller and a few other good investors that we sometimes talk about on the show, they've been kind of buying into this. And you'll notice that there are some upgrades across the board because ratios are a little bit better at the same price than they once were. And that's telling you that the market's starting to get a little bit hot on some of these stocks. So mid caps and small caps could be the future, especially if we continue to see rally moving forward. So the question we're all asking is, will we continue to see a rally? Is this the beginning of a crash, a bull trap, something like that? Well, we have to look at cyclical bull markets in general, and we know that they last median duration between 31 and 33 months. So being in May, we're not quite near that length. So basically, we could and still probably are in a bull market run. We also know if we look at 1966, 1994, or any of these other runs, they generally are speaking towards more bullish kind of movement and then possibly a little bit of weakness. Now, this is the notable stagflationary period, and I don't tend to think we're running the 1966, but even if we look at election years, which is where we find ourselves right now, you'll notice that the markets remain flat around this time with up, down, and all around in pretty much all scenarios. And then they rally and then they tend more to drop around that September into November period with a big bull run after and during the election. Also, hedge funds, they're a big part of how markets move. And as you know, semiconductors are becoming pretty much their number one favorite thing to be in. And look at this massive expansion. So I think it's clear to me anyway that semiconductors will eventually become a big problem, because they're going to go too heavy and too fast. But with NVIDIA holding up the market with all of this big buzz around it, I think semiconductors will continue to be bulled up by hedge funds. And what we'll be looking at doing is seeing whether they're leveraging in hard. Because the one thing about hedge funds is they like it at the beginning, and then they go hard, and then they leverage up, and that's when you want to be most terrified. Also, with the market pulling down, should we be a little bit concerned? Well, one of the things is you can often look at the US dollar. So like bonds, if the US dollar is spiking heavily, then that tends to lead into you being a little bit more concerned. At this stage, the US dollar is doing exactly what we thought it would do, which is rallying into the next supply. And I think we're coming into a very good zone, which we'll look at on the charts. Move index, similar with bonds. We're looking at the move index. Is it freaking out? Well, generally, if the move index is going up, it's pretty correlated with the market going down. And we've got that chart coming up in just a moment. Let's have a look at flows. Semiconductors up last 24 hours, everything else down. But the most notable scary parts of the market, things like home construction and defensives, they weren't the ones at the top. So we weren't clearly seeing a risk off across the board. We were just seeing, strong semiconductors and kind of what you would expect, which is possibly a shakeout here at the highs for stock market traders. Let's have a look here at the overall 5-day run, solar, semiconductors, technology, metals, all the normal suspects. And of course, these two to watch, regional banks and home construction. If they keep weakening over the next couple of weeks, that will be a problem. So as we mentioned, it's important to look at the underlying. Just because you see a green candle or a red candle does not mean that it's very strong. We saw the advanced decline line over the recent trade sessions come down, which we reported on specifically yesterday and the day before. The other thing that we saw was the last 6 sessions were all negative. So someone was selling. Now, of course, we've had another negative session and the market closed near the lows, which suggests that, it could be a bit more than you think. And when we look at the futures market action, you'll start to break it down a little bit together. We have a series of higher highs. We have kind of this rally that was met by instantaneous selling pretty much through the session. And then, of course, sold some more. And you'll notice it traded quite a lot around 53.10. So 53.10 is probably the biggest fight zone. And 5,200 is where I think the biggest bulls sit. So there are option puts sitting at 52.50, 52.60 for the next 2 sessions. We move from one session being positive gamma all the way into negative gamma, which basically means that if this level is flown through, then we're going to move here fairly quickly. And this is a pretty big deal. And this is, of course, a pretty big deal right now. We also know that if the market does come back up to 53.12, that not only could bears be sitting there, but it's also a 61.8 fib pullback of this overall run. So there's a lot to say that maybe this is a little bit more of a sell-off than you think. And to get a general sell-off in the vicinity of around 3 to 4% is very normal at all-time highs. So you can see here that would be 3% down to this anchored VWAP line. And this is probably the most important zone for the bulls to really hold. So is the market still an uptrend on the high time frames? Of course. Is it starting to look weaker on the small time frames? Yes, it actually changed to the downside over the last 24 hours. So let's have a look at the options with it, because these are all important. 52.80 is what I'm looking at. I would expect the market to try to hold above that by Friday's close. If it doesn't and it starts moving down, then that's going to create a cascade effect, and 5200 would be the next stop. Same thing for next week, the Tuesday options here, because of course Monday's public holiday. We have a pretty strong hold at 52.60. We have moved into the negative gamma space. So if that gets taken, it creates a hedging effect that can push us down. And again, I think 5200 will be the important level. So a lot of action going on. Positive gamma all the way to negative gamma, just like that in these markets. And that's something that we do want to keep in mind. Do CTAs agree with all of this? Well, yes, they do. They actually think it's down on the S&P, and they also think it's down on the NASDAQ. So do CTAs agree with this? Well, they do. The S&P 500 is down. And of course, as we've been recently reporting, the NASDAQ is neutral, which is basically just telling us that the systematic funds haven't really been part of this last little bit of the rally. They've been part of course, all everything else, but the last little bit of the rally, they've kind of said, yeah, maybe we're not going to be part of that. Was it retail traders pushing it up? Well, certainly could have been. Another one's Brent. We've seen declines here on the overall CTA positioning. We'll go through Brent later, being oil, and gold also starting to reprice its way down, which again, we've talked about a few times on the show. Along with the exhaustion, time for us to reset down to here, and then hopefully see some nice buys come back into gold. What about the other major stocks? Tesla, probably one of the disappointing ones, went through 185, got 186. This is a very important session for it, obviously, to hold up. It didn't. It came down to 173 over the last 24 hours. I would expect it to kind of bounce back up, maybe getting above 177 over Friday. I think that would be probably pretty normal. And you can see here 175 is a very important zone, because if we go through that, we're going to create negative gamma and again start to push down fairly heavily. So what are we looking for? Tesla to hold this zone if you are a bull on that stock, which we've been discussing the last couple of days. Now, if you go over to NVIDIA, it's a totally different scenario. Everything's positive gamma. There's calls everywhere. Everyone's loving it. And 1,050, closing above here creates hedging, pushing it to 1,100. Very, very strong stuff from NVIDIA across the board. All right, let's take a look at the charts now together. And we'll start off here with the volatility index. As we mentioned a few days ago, the volatility index gave us an alert going underneath this low over here and suggesting that maybe one day out from NVIDIA, we had to expect vol to increase. Well, it did. And that doesn't mean that we want to trade the volatility index, but it is something that we can keep in the back of our pocket as an indicator. We do want to also use some other indicators out there, such as this one. This is the bond market options indicator, basically showing where the bonds are freaking out. As it turns out, they're not really, not yet anyway. So that's important during this pullback. Dow Jones Transportation and home construction, both falling off, certainly showing weakness. In particular, a lot of people looking at the transportation average saying this is really sick and the markets are not doing what they should be. I would say it's one of the reads, and along with things like the American consumer, which is consumer discretionary versus staples, you can see that there's certainly a hidden underlying worsening of maybe economic conditions. Does this mean automatically the markets are going to crash? I would say no, because of course we're being led by the AI revolution. So that's very important. Innovation is leading, so that's important. But some of the underlying is starting to get a little bit weak. And again, consumer discretionary, I wouldn't say it's the place to be right now. When we take a look at the bonds market as well, and we look at the MOVE index, as we mentioned at the start of today's video, this option volatility has been generally dropping, which is again quite bullish for the markets. And we saw that when this spiked up last time, we sold off. So it's one of the markets that we will be paying a lot of attention to over the next coming sessions. A little bit of a spike up, but I wouldn't say it's a total freak out or anything at this point. And that brings us really into thinking, again, this could be a fairly shallow pullback. What about copper? Well, let's have a look at the metals. As we know, new all-time high, or at least new high over here for copper. And it's been an epic run. So whenever you have an epic run like this, it's time for a pullback. It is crowded. This is a massive crowded trade, and everybody has been in this thing recently. We first talked about it down here, but everybody's been in it recently. So do I think this is an important zone? It is. It's a daily 20 moving average, which we know is a level where day traders will want to look at it. And as we always say, patience, react, don't predict. So basically that means that we want to be looking at the market and we want to pay attention to when it starts to react and starts to bring the flow back in. I'm thinking at this stage somewhere around 488 might bring some buyers back into copper, but I'm not sure at this stage that is exactly the buy zone for it just yet. Let's react to that soon. US dollar moving up as we expect. 105.20 is kind of where we kind of think it could go to. It's actually a pretty heavy trade zone through here. So what I'm thinking at this stage is that we took the stop losses here. We pushed the narrative of the bull side. Obviously, when the markets go down, US dollar usually does spike up. And the real battleground is here. This is where the bears sit. So we got that 104 the other day. Perfect. We expected to bounce. The bounces continued to bounce up. And then this is where I think the bears could come in. So something that we'll be paying a lot of attention to. That's also leading into gold as well. Do I like gold at this level? Not really. I don't think it's the key zone. I'm bullish on gold, and an investor, I don't care. But as a trader, I'm not looking at that necessarily, that zone. I think more around 2300, 2320 would be an interesting area. And then underneath this low down here would be another interesting area. And I think we got to couple this with the US dollar. The same with silver, which has been stronger. As we know, silver is stronger than gold with our ratios recently. But yeah, a little bit more to fall possibly for those two markets. Speaking of falling, oil rallied up as we expected and then got dumped. And this, of course, looks pretty negative on the charts. You can see here the long leg doji, basically a rejection wick off the high. We talked about this being a great bull zone. I guess I left it there just so you can see how, as a trader, you've got to evolve and change your perspectives if you're trading versus positioning. So you'll notice here, was it reacted off? Yes. Yes. Beautiful. Questionable, because remember, 20 moving average, we have many supports, many resistances. So we know it's that last level. And then as it fell off here, as I said on the video shows, we just couldn't be bullish anymore. It was really nasty. So unfortunately, that's what happens. But when you get those perfect entries, it doesn't matter. You're given the flexibility to make the next decision. If I had to look at this chart right now, I'd say 72 barrel is where it's going to next. But we'll find out whether it makes a new low and closes bad for the weekly. All right, let's take a look at some of the stocks now. We'll move over to Tesla, 173. I'd like to see this thing close above that other options level we discussed before. One of the things, a bit disappointing, it went up to 185. We did expect that. It saw the close here. That usually means there's more buyers to come. And as you can see, we've dropped straight back down to where you need to see buyers recommit. So hopefully Tesla hodlers and people can be looking at the buy over the next 24 hours. It's not the greatest trade I've ever seen, but we saw where the option puts are. We've turned into negative gamma. So if it starts to take this level, it's probably going to make a new low and then maybe even go worse. So this stock's come under a lot of, I guess you could say, pressure recently. I do like it around this zone. Hopefully a buyer will come back through. Similar on solar, love the kind of setup here. Longer term positioning, I think volume is really, really huge and not unexpected to see it give up some of its gains. Solar, though, I think coming out of a base that it's been sitting in for a very long time. If you ever put it on a chart and really zoom it out, you'll notice how bad solar's been. So, yeah, interesting point for solar, certainly one we're watching. Hood, another one that we've seen some strength in recently after that pretty good earnings result that got sold and then rallied back up. Evening Star, as we talked about in the previous video, dropping off. Could see it a little bit lower first. But again, if the markets do rally through the Friday, it's probably going to pick up a little bit before it goes down. Volume has increased since the earnings. So, yeah, we'll see how the weekly ends up closing. We'll check that one out. NVIDIA, difficult to add into this particular trade at these prices. You did get an opportunity for a pretty good price recently, which was one of our key buy zones. But the thing about this is that it is in a stock split now, and even pullbacks, you have to admit that they're probably going to be met by bull demand. Stock split, bullish, as we've seen in the stats, bullish stock, bullish everything. It's part of the pinnacles that we talk about, the three pillars, NVIDIA, Microsoft, Google, my three faves at the moment. And, one of the things is I'm even less favorable on Microsoft than I've ever been in ever, pretty much over a decade. And the reason is just the price doesn't make as much sense. At least NVIDIA with the crazy price is growing at a crazy rate. But yeah, certainly very, very interesting stock. And at this stage, could it go to 1400? Absolutely, it could. Purely just built on hype. I do think, though, if you came back in 4 or 5 years, you're going to see NVIDIA at a lower price than it is right now. And you might say, but that's impossible. It's going to grow. I would say I think there's probably a problem going to come for not so much that stock, but the whole market over that period. And what that will do is it'll end up, this is being rallied by AI. I liken it a bit to the dot-com bubble. NVIDIA is a great company. It's the leader. It's the best. But it's kind of like how back in the day you had Google as a great company as well. It still got shredded for a bit and then came back very, very strongly. Let's move over to the major indices. Aussie 200 to start off with for the Australian traders out there. Yeah, you're on support, but I could see it still coming down here. It really depends on what the US market chooses to do. At the moment, the US market's turned negative on smaller timeframes, so rallies to be met by possible sell demand. And one of the reasons that's happening is this chart here, the equal weighted market. Now, I'm looking for the equal weighted market to make a new all-time high to really trigger mid caps and small caps again. But this was quite weak, and it shows you that there's an underlying kind of little bit of weakness in recent sessions. And again, it sold 1.4 versus like 0.6 or something on the market. So a lot more negative in the equal weighted markets. Broad-based, things were selling. Semiconductors held up the real market at this point. US 2K, similar, coming down to its first level of support, might be purchased off. If it does end up seeing further sells, I could see the US 2K at around 2,000. So basically the Russell to 2,000 is a real possibility. And then I'd like to see buyers recommit at around those prices. Of course, Druckenmiller being bullish on that one. Now let's jump on over to actually the NASDAQ first. And I just want to say here, the NASDAQ is of course a little bit stronger than the rest because it's got those AI style companies in it. But what I would say is the US 500 is giving better reads than the NASDAQ at this point. And while the NASDAQ's melting up, I think you could use the US 500 as your overall read and then trade the NASDAQ accordingly. So at the moment, it's nowhere near as weak. There's actually not a change of trend on the daily or anything like that. And you'll notice it's still holding some of the major support lows. So yeah, NASDAQ definitely stronger than the rest. Bitcoin, beautiful level, 66K-ish zone. Certainly where you'd expect to see that first buyer. We talked about this being that demand, that 20 moving average. So for Bitcoin hodlers, you can't hate this zone. It's pretty strong. Obviously put pressure on up here. You've got the Ethereum ETF, I believe, approved by the SEC, or at least partial approved or whatever it is. So that's a fairly big deal. But when you move over to Ethereum, you'll notice it had that big volatility on it. What is that candle size? Let's have a look. So 11.55%, almost making those highs there for Ethereum. But yeah, very strong. Will it be kind of like that buy the rumor, sell the fact? It certainly could be. I think it's a great thing for Ethereum. Of course, to get the ETFs opens up your alt asset investments throughout Wall Street. And it is a big deal for crypto. So what's next? Is it going to be Solana? What do you think? Let us know in the comments down below. As always, guys, if you enjoyed today's video, subscribe, smash that bell icon, and of course, follow us over on X. I shared some awesome charts over there that you might want to take a look at. So links in the description for that. Thanks so much. You have a great Friday. We'll see you in the next one. Let's find out whether the bears are actually back in town because there's a big level coming up very, very soon.